Hello everyone, welcome back to this week's Technical Insights, where we give you a midweek update of what is happening in the market right now. US stocks are still largely in the green after the first 2 days of the trading week. The S&P 500 climbed 42 points or 0.7% on Tuesday to 5,886 points, riding on the 3.2% gain that we saw on Monday. The Nasdaq Composite Index also added 301 points or 1.6% to finish at 19,010 points, building on the 4.3% jump that we saw yesterday. The Dow was the odd performer overnight, dropping 269 points or 0.64% to end at 42,140 points after the 1,160 points jump or 2.8% gain that we saw on Monday. Over the weekend, we also heard the US and China announce a 90-day reduction on the tariffs. This was seen as a major de-escalation of the trade tension between the world's two largest economies. A joint statement by the US and China stated that they will pause the reciprocal tariff on each other products, cutting the existing duties by 115 percentage points to 10 and 30% respectively now. So with the 90-day pause, Chinese exporters can now resume front-loading of production and shipment to the US in the 90-day windows, which could provide near-term boost to the economic outlook of both countries. On Tuesday night, we also saw macroeconomic data coming out from the US, where the US CPI data is to 2.3% in April from a year ago, a tick below the 2.4%, which was recorded in the March period and also below the economist's expectation. This data did not show that consumer prices have jumped or increased due to the US tariff. In fact, the annual reading came in lower than expected, and the core figures, which exclude the volatile food and energy prices, was also less than the forecast for the month. This caused investors to pare down the prediction of a US recession, giving the Fed more room to leave interest rate unchanged. But of course, Trump doubled down the pressure, asking Powell to cut interest rate immediately. Major tech names were among the biggest winner on Tuesday trading session, with the tech sector rising more than 2%. Nvidia jumped more than 5% on the news that semiconductor giant would be sending more than 80,000 of its AI chips to Saudi Arabia. This is the largest leg of the market rebound that has seen blue chip stocks built on solid winning streak. Apple has also risen in 4 back-to-back sessions, while Amazon has notched 5 straight positive days. Beside the tech stocks, we also saw Goldman Sachs climbing in 5 consecutive sessions, while Disney winning streak also hit 6 consecutive days. For the trading week so far, the Dow is up 2.16%, while the broad index S&P 500 is up 4%, and the tech-heavy Nasdaq Composite Index jumped more than 6%. As we prepare for Thursday, US PPI data and retail sales numbers. Back to Singapore, our local market started trading on Tuesday due to the Vesak Day holiday. The STI index catching up with global indices closed higher by 4.8 points or 0.13% after last week's 0.81% gain. The breakthrough in US and China talks caused our benchmark index to spike up more than 1.8% in early trading yesterday and reaching a high of 3,944 points. Top performer on the STI index on Tuesday was Jiangzijiang Shipbuilding, which jumped more than 4.2% or 9 cents to $2.21. In early Wednesday morning trading, it is down 3 cents and now at $2.18. On the other hand, technology and defense stocks ST Engineering lost 7.1% or 54 cents on Tuesday to close at $7.09. And on Wednesday early trading, the stock rebounded up 8 cents or 1.13% and is now at $7.17. For ST Engineering, the company reported the first quarter result last Friday. Total revenue rose 8% to 2.9 billion Sing dollars for the first quarter ended 31st March, from 2.7 billion in the corresponding year-ago period. Shares of ST Engineering then reached a 52-week high of $7.63 at the market close on Friday. During the quarter, the group reported contract wins of 4.4 billion Sing dollars, leading to an order book of 29.8 billion as of 31st March. About 7.3 billion of its order book is expected to be delivered for the rest of the year. According to the company, the impact on US tariff will only have an immaterial financial impact on the business. While it sees potential recession and inflation risks, the company believes it is shielded by its diverse business portfolio. For the quarter, ST Engineering declared an interim dividend of 4 cents per share. So for this week's technical analysis, let's take a look at ST Engineering. This Wednesday morning, ST Engineering shares regained about 8 cents or 1.13% to $7.17 after Tuesday's 7.1% drop, as you can see over here. The share price fell 54 cents after their latest earning on Friday. Looking at ST Engineering price chart now, we noted that ST Engineering share price has largely been on a steady uptrend in the year of 2024. It hit a year-to-date high of $4.81 last year on the 18th of October over here. This year, ST Engineering share price managed to break above this level in January and started a new uptrend, hitting a new all-time high of $7.67 last Friday. Looking at possible resistance level, the all-time high last Friday at $7.67 will be the immediate resistance level, with the upper bound of the Bollinger Band in white now at $7.73. Immediate support level may come in at the $6.93 level, which was a resistance level that we saw on the 20th of March, having a change in polarity now. The next support level would be the 50 days moving average, which is the blue line that you see here, finding confluence with the lower bound of the Bollinger Band around the $6.73 or the $6.78 level. Looking at the indicators, the MACD now has a negative reading after last Friday's 7% drop. This indicates that ST Engineering share price may have peaked in the near term and may now retrace back into a sideways consolidation pattern. The latest reading on the RSI has now pulled back to 51 points, 1 point above the 50-point neutral mark, signaling that the uptrend momentum that we see in the last few weeks is subsiding fast, and a drop below the 50-point neutral mark in the RSI indicator may indicate further pullbacks towards the 50 days moving average at $6.73. So for investors looking at ST Engineering, it will be wise to wait for a further pullback towards $6.73 before considering accumulating the share again. On the longer term, looking at 15 analysts covering ST Engineering, 9 have a strong buy call and 3 have a buy call, while 2 have a hold call and 1 have a sell call. The 12-month average target price among the analysts is $8.19, representing a possible 15% upside from here, with the maximum estimate at $9 and the minimum estimate around the $6.70 level. And these are the updates that I have for you this week. If you do find this information useful, do remember to like, share, and subscribe to stay updated with the latest market movement. And I'll see you again next week in the next Technical Insights.